Unfortunately, you don't get to keep all of your earnings. A lot goes to the taxman and some goes to the national insurance. In today's video, we're going to be looking at earnings in a lot more depth. This is the 12th in a 12-part series designed to assist you in preparing for the LIBF Unit 1 exam. Let's check it out. Within this video, we're going to look at the topic of earnings and how earnings may be eroded through things like income tax, national insurance, etc. We're also going to look at maximum working hours, the national minimum wage, and we're going to do some calculations on payslips. So, what is the national minimum wage, or NMW for short? Well, it was introduced 25 years ago in 1998, and it's expressed as a per hour rate. Essentially, it's the minimum that employers can pay their staff per hour at different age ratings. So for 16 to 17-year-olds, the rate from April 2022 will be £4.81 per hour. Likewise, for 21 to 22-year-olds, they will be paid a minimum of £9.18 per hour. You can see that any apprentices, no matter what their age, will get a minimum of £4.81 an hour, and this has significantly been increased since the previous rate. Now, what is the Working Time Directive, otherwise known as the maximum working hours? Well, once again, it's based around a law that was introduced 25 years ago. A summary of the employee's entitlements can be seen in the table. Now, the Working Time Directive means that, in terms of weekly hours, an individual employee can only work a maximum of 48 hours, averaged over 17 weeks. Of course, an employee can waive their right to this working hours agreement. Employees are also entitled to 5.6 weeks paid holiday per year if you work 5 days a week. However, if you work less than 5 days a week, of course, you don't accrue the same amount of holidays. You can see the asterisks at the bottom of the page. People who work less than 5 days a week are entitled to the pro rata equivalent. For example, if they work 3 days a week, the calculation would be 3 times 5.6, and therefore they would be entitled to 16.8 days per annum or per year. In terms of rest hours, employees can get 11 consecutive hours rest in any 24-hour period. That is protected under the Working Time Regulations of 1998. Employees should also be given a rest break, a 20-minute rest or lunch break if the working day is longer than 6 hours. They should also be given at least 1 day off per week. What about income tax then? So we earn our income, otherwise known as gross income. However, we have to pay tax. It's a tax levied on our personal income. Not all incomes are taxable, however. The personal amount you pay in income tax depends on what personal allowance you have. And the personal allowance provides an amount of tax-free income each year. So for the vast majority of people, they have up to a £12,570 tax-free personal allowance, at which point the tax rate is 0%. Now, the amount you earn over 12,570, up to a maximum of 50,270, you will pay a tax rate of 20% on that amount, otherwise known as a basic rate of tax. You can see as you start to earn over £50,000, a higher rate kicks in. So 50,271 up to a maximum of £150,000, you will pay 40% on that specific amount. And finally, anything over 150,000 is taxed at the additional rate of 45%. The current tax year runs from the 6th of April to the 5th of April. So within that time period, those tax rates apply. PAYE, otherwise known as pay as you earn, is a system of deducting the tax that an employee owes directly from their wages or salary. So if you are paying tax through your employment, then your employer will take out your tax directly from your wage or salary before it arrives in your bank account. So it's something that employed people do not have to worry about. Your payslip shows how much pay has been deducted. Now, your employer pays that amount to His Majesty's Revenue and Customs on your behalf. National insurance contributions are paid to build up your entitlement to certain state benefits, including the state pension. You pay national insurance if you are 16 or over and earning above the minimum threshold. Now, the exact amount you pay depends upon how much you earn and whether you're employed or self-employed. You need a minimum of 10 years contributions, which will entitle you to 10/35 of the full state pension at the time that you claim your state pension, i.e. the current retirement age in the UK at the moment is 68. Now, how much national insurance do you pay then? So you'll see here on the left, there are various categories. The vast majority of people will fall into category A, but some married women will fall into category B, apprentices under the age of 25 in category H, employees under 21 will fall into category M, etc. Now, depending on what category you fall into, you will pay a different rate of national insurance. As I said, the vast majority of people will fall into category A, and earnings at or above the lower earnings limit up to and including the primary threshold they will pay 0% on. However, above the primary threshold up to and including upper limits will be 13.5%. And you can see different people will therefore pay different amounts of national insurance. Employees over the state pension age will pay nothing at all in terms of national insurance if they continue to work. Employees under 21, however, will have to pay exactly the same as employees over 21. And veterans also fall into that category of paying the full amount. So let's have a look at a basic pay slip. This is for an employee called Beatrice Bourbon. It's from the date 25th of September 2018. On the payslip, you can see her employee number. You can also see her national insurance number. You can see her address at the bottom left corner, and you can see lots of figures. Let's have a look at those figures. On the left-hand side, you can see that Beatrice earns basic pay of £2,625. If she earned any through overtime, this would also be listed. But as she hasn't earned any through overtime this month, her total payments equal £2,625. Now on the right hand side of the payslip you see her deductions. She's paid income tax of £331, national insurance of £227.61, and she's also paying out for her student loan repayments of £46. In total, if you add those three together, you get total deductions of £604.61. So at the bottom of the payslip, in the middle, you can see that her total payments were £2,625, whereas her total deductions were £604.21. So, on the right-hand side at the bottom, you have her year-to-date payment. So altogether, up to and including this month's payslip, she has been paid £5,250. She has paid income tax of £662 thus far. Her employee national insurance contributions equate to £455.22, and her employer national insurance contributions equate to £724.50. Now, how do we work out her net pay then? Well, we take her gross pay, or her total payment of £2,625, and we take away her total deductions. That leaves her with net pay, i.e. what would hit her bank account, of £2,020.39. So self-assessment tax returns. This is a form where you record taxable income from employment, property, foreign income, interest on savings, as well as income received through dividends. The deadlines for submitting your self-assessment tax returns are the 31st of October if you wish to submit a paper return, whereas the 31st of January for online returns. Most people do not have to complete one of these self-assessment tax returns. However, if you have more complicated tax affairs, you may need to complete a tax return for His Majesty's Revenue and Customs. Under what circumstances might you have more complicated tax affairs? Well, these include if you are self-employed. You have to declare your income and of course how much tax you need to pay. 2. If you are a company director. 3. If you are a trustee or a personal representative. And 4. If you have foreign income, you have to declare your income. So how long should you keep records relating to your tax returns and tax affairs? Yes, you should certainly keep them, and you should keep them for 22 months after the end of the tax year that the tax return covers. This might be in case His Majesty's Revenue and Customs needs to check them, or if you as an individual wish to appeal against the tax calculation. So, some multiple choice questions to assess your understanding of this topic. Firstly, which of the following groups of people will not receive the national minimum wage? Is it A, 16 to 18-year-olds, B, 19 to 20-year-olds, C, 21 to 22-year-olds, or D, people over the age of 22? The answer to question number 1 is D. People who are over the age of 22 are entitled to the national living wage. This is a premium over the national minimum wage, and therefore they are not entitled to the national minimum wage. Question number 2. Luna works 8 hours a day as a claims handler for an insurance firm. According to the working time regulations, how long a break, if any, is Luna entitled to? Is it nil, 20 minutes, 30 minutes, or 60 minutes? Now, according to the working time regulations, Luna would be entitled to a 20-minute break as she is working over 6 hours. Question 3. David earns £21,500 per year. He has a personal allowance of £11,000 and pays an income tax rate of 20% on the amount above the personal allowance. Calculate how much tax he pays. If you wish to pause the video and calculate, now might be a good time. So the answer, is it 1,050, 2,100, 4,300, or 6,500? The answer, of course, is B. The calculation that David would have to do is 21,500, which is his earnings, minus 11,000, which is his personal allowance. That would give him £10,500, and he has to pay 20% of that to His Majesty's Revenue and Customs, which would equate to B, £2,100. Make sure you subscribe to this channel for financial studies videos. I'll be doing full evaluations of both case studies when they're released.